So good afternoon, everyone. So let's start, no? This has been a pretty interesting September in terms of market movement. We'll talk about it in the next 30 minutes, 45 minutes or so. So yeah, let's start. So what happened in the month of September? We'll discuss all about it, what to watch out for. In October, it's already October, but there are a lot of things to watch out for, especially global markets. There are a lot of risks right now. Then we'll talk about our long-term stock picks. I also included here some fundamental picks that we featured in our Traders Playbook report. So we would like to highlight those that we, prefer more. And then afterwards, Traders Playbook highlights in terms of the performance and the like. We like to keep our transparency in terms of the performance despite whatever's happening in the market. Okay, so what happened in the month of September? PSCI in the month of September alone went down by 12%. We closed at 5,741 last Friday. Year to date, the PSI is down by 19.4%. If you include the rally earlier, probably the market is down by 16%, right, year to date. But what tracked the market? Kasi ito yan eh. This is how we should look at it. Number one, inflation is the number one issue. Inflation, not only in the Philippines, but globally. So inflation has yet to peak. That's the issue. Since inflation has yet to peak, central banks across the world are raising rates. Diba? Especially yung US Central Bank. Since mas aggressive yung US Central Bank as compared to, let's say, Philippines, diba? If you watch the news kasi, yung US is raising around 75 bips, the Philippines 50 bips, and the country which raises rates more aggressive, mas malakas yung currency nila. The currency is stronger. Hence, you see US dollar like up by 20% year to date as compared to the other countries, including Philippines. And then, unfortunately, we also had Super Typhoon Carding, which according to news, in terms of impact, it's around 3 billion pesos already. Diba? So, I mean, we already have problems in supply, and then the Super Typhoon came, then that exacerbated the issue. Then this is just to show you a graph that, I got from TradingView. Wala dyan yung Philippines, but for the Philippines, probably down by between the Australian and Euros. But just take a look at how US dollars is performing, right? So, taking everything down, diba? Yen, British pounds, euros, Canadian, Australian dollars, Philippine peso, diba? So, that's really a good chart to look at to realize the impact of a stronger dollar. So, now this comes into question, diba? Why is US dollar stronger as compared to the other currency, di ba? Kasi I believe we talked about it like a couple of months ago. Why is Philippine peso down? Because pair yan eh. Stronger dollar with peso. We talked about a couple of months ago why peso is weak, but based from the graph or the chart in the prior slide, it's mostly US dollar really strong. So let's discuss why. So there are three main reasons if you ask me. So first is the value of affiliated currency tends to reflect the prospects for the return on investment in the country's assets. So the bottom line here on the first slide is in GDP, yung economic performance ng US is outperforming other developed markets like Eurozone, Japan. So in terms of pag-increase ng rates, they have the more capacity to increase rates, diba? Because as a central bank, it's a hard balancing act. It's hard balancing act. So if you increase rates, you make borrowing harder. Kasi tataas yung borrowing cost eh. For the US, they've already recovered in terms of economic from the COVID. As for the other countries, diba, Philippines pa-recover pa lang, pare-open pa nga lang. Yung mask, right? Paano pa nga lang eh. Ngayon pala naging optional. So in terms of economic activity, it's just expected to, pick up the pace. But for the US, I've been here last year, September, then I went last year, September, then I went back here, July. Last year pa lang, September, I wasn't wearing any mask anymore. Diba? So the economic activity space has recovered. The opening has really fully ramped up. So the performance of the US is already up there. Okay. Next, Fed tightening cycles tend to be particularly negative for emerging market countries. Diba? This cycle, you can see how damaging it is. Many emerging market countries, companies issued dollar-denominated debt over the past years when borrowing costs were low. And of course, they took advantage. But now, imagine mo, if you borrowed, let's say, 1 billion US dollars, diba? If you're a country, you borrowed 1 billion US dollars. Tapos, yung dollar, you didn't, for example, you didn't add any debt, but the dollar rallied by 22%. So yung debt mo, yung value niya, nasa 1.2 na, 1.2 billion, diba? So you didn't borrow more, but the value of your debt is higher. So that's resulting in weaker currency of the other emerging markets. Tapos some have resulted in credit downgrades, default, diba? So next is safe haven inflows. Lastly, that's the third reason, safe haven inflows. In times of economic political turmoil, historically, investors have moved to the US dollar for safety and liquidity. Because keep in mind that the US Treasury market is one of the largest, most liquid markets in the world with strong legal protections where investors are confident that they can access their money at any time. So those three reasons why US dollar is really strong. Diba? So again, if you've watched yung wrap up 2 months ago, if you've watched my TV interviews, I mentioned you, but the peso is weak. It's because of the strong US dollar, and of course it's import season in the Philippines. So that usually if it's import season, dollar or peso is weak. Okay, so I hope this sheds some light on the stronger US dollar. So in terms of technical analysis of the PSA, the chart is as of Friday. So at least the 5.7 proved to be a support at this point in time, but the resistance of 6,000 will now be tested in the coming days. Because keep in mind, the basic of technical analysis, the previous support, which was 6,000, is now the resistance. And if the market fails to break above 6,000 in the coming days, the tendency is the downtrend will resume, meaning higher tendency that the 5.7 will break below. Now the next support is 5,400 and the like, diba? So there's a lot of prediction and dead cat bounce to it. As of now, that's highly probable. Okay, based on technical analysis. So we must be prepared that this may just be an oversold bounce, bargain hunting lang, or maybe a lot of investors taking advantage sa rally overseas tapos nagbenta lang sa Philippines just to, pair some losses. So we have to be prepared that the market is not yet the bottom. We're seeing a lot of articles, a lot of risks. We will talk about it in the coming slides. But for technical analysis wise, this may just be an oversold bounce, so we must be prepared for more downside. So what do you watch out for in October? Again, still the movement of USD peso, it just keeps on depreciating. Yung peso keeps on depreciating. There are lots of rooms for US dollar to outperform. So we must be prepared for further pullback sa Philippine stocks. Kasi what we're seeing now, there's a lot of foreign selling, mainly because the value of the investment ng foreigners dito is getting lower also. So for example, if I bought 1 million pesos as compared to dollar, talo ako sa Philippines. So that's also one reason. We must be prepared also, or we must be aware of the language of the central banks across the world, inflation, monetary policy, especially right now. They're battling not only inflation but the depreciation of their currency because of the strong US dollar. So there's a lot of issues to consider. It's also corporate earnings season. Actually, most of this is November pa naman. But for the US, we're seeing a lot of corporate earnings already. So of course, if US corporate earnings are not doing so well, that could result in lower share price movements in the US, which could be trickled down by emerging markets. Cracks in the global financial system. We're seeing a bit of cracks already, guys. Okay, so actually, I will discuss this also in the next slide. Geopolitics also. If you ask me, the main risk or the possible black swan moving forward is like war and stuff. Diba? If you observe not only in North Korea, etc., but China, Taiwan, something to hopefully doesn't happen. But of course, I'm watching on all sides of this market, especially pinapricing your risk. So what else should we watch out for? Oil prices to increase during winter months. Diba? We thought I guess us Filipinos are happier kasi yung oil prices bumababa. But the main reason is because of recession fears. Demand fears because of recession. That's the specific way on why oil prices are pulling back. But during winter months, mas nag-require na ng fuel. So especially right now, we're globally may supply issue yung oil. So will oil prices shoot up again during winter months? That's something to watch out for definitely. In terms of economic data, yeah, manufacturing came out yesterday for the Philippines, so it was good. Inflation tomorrow, October 5th. Unemployment rate also. So let's see if I guess that will test if the market can sustain its rally. The local market can sustain its rally if inflation data is showing signs of peak already. For the US, definitely inflation must watch jobs report also because that will determine how aggressive the US central bank will be. So for US, inflation October 13th, jobs report October 7th on Friday. So I mentioned earlier the cracks in the financial system. I've been seeing news regarding Credit Suisse that the spreads of the bank's credit default swaps and usually the credit default swaps, these provide investors with protection against financial risks such as default. So the spreads rose sharply last Friday. What does it mean? And the spread is already near like 2008 level. So there's rumors now of Lehman-like collapse floated. So of course the bank is trying to appease its investors and everyone. Because this is quite concerning, diba? So this could be like an isolated case for now, but we definitely should watch this space. So just to define a bit on the next slide, diba? Credit default swap spike. What does it mean? So Credit Suisse credit default swaps. It's a derivative instrument that allows an investor to swap their credit risk with another investor. So the spike occurred last Friday. So that reflects market perception of increasing risk. So it's now approaching the high seen last noong 2008 pa. So syempre, of course, that warrants concerns across the global financial system. So this is what we're referring to kanina as the cracks sa financial system. So we should continue to watch this space, di ba? Especially if you take a look ng price action ni PSEI and other markets, pa-downtrend. So will there be a trigger? What's the trigger for that further breakdown, di ba? So is this it? So let's see. So in terms of stock picks, we've mentioned this several times. So I'll focus more on those na I guess we on some stocks now we changed target price or release a new report on. Okay, so for SM it's the same. So in target price 1,025. This SM pa rin is our top pick because we're really still pushing for the economic reopening. You guys notice na we're not being too specific on our picks, specifically focusing on top second tier. So we're not at that path. We're focusing on the top tier, the index names, because at this point in time, this is not the time to be fully aggressive. This is the time to be picky, right? So SM pa rin kasi economic reopening, retail, real estate banks, which they lead. For Jollibee, 260 pesos. Jollibee, relatively resilient price action. If you notice, Jollibee nagpo-pull back yan, but in terms of price action, it's quite resilient because it's seeing a strong rebound not only in the Philippines but overseas. Diba? Kasi this is the nice thing. This is a nice business model kasi if you're exposed overseas, diba? So you have, for example, especially in post-COVID, other countries have reopened already. So even if you're a bit struggling on your local business, you're seeing already a rebound globally. So that's how Jollibee recovered. So target price is 260. For RHI, 70 pesos target price. And for RHI, the thesis here, why we like RHI is because given the rising inflation environment, we should turn to companies that has the ability to pass on costs to its customers. For RHI, we have to keep in mind that yung target market niya mid to high income. So, relatively resilient to inflation. Of course, affected pa rin naman yung mid to high income target market, but they're relatively resilient. So, hence, we like RHI. For Yalaland, we have yet to revise our target price on this one. But the bottom line is, at current levels, at 24, it's something to definitely pick up. Kasi for the property sector, our top pick, which I will tell you later, we prefer to focus more on stocks that have high mall exposure. Ayala Land, has a good mall exposure, but we will mention to you our topic later sa property. So si RLC, target price 25 pesos, good balance between among office, retail, and malls. So office, residential, and malls. So we have to take into consideration that property names have been battered in the past months, some trading already below book value. So it's something to consider definitely. But we have to be patient because a lot of investors have been selling properties because of their real estate exposure. Because real estate right now is struggling because of high interest rates, and that's a fact. We're seeing cancellations and the like. Hence, we like names with more exposure sa mall side. That's why our topic sa sector is CSM Prime. Because historically, the mall business accounts for 60 to 70% of the company's operating income. Hence, you will see the resilience of SMPH as compared to the other property names, right? Hence, SMPH is our top pick sa property. Target price is 43. For the financials, it has been consolidating. BPI, one of the more resilient names. Our target price for BPI is 99. Especially right now, cost efficiency is the name of the game. And digitalization efforts of BPI have continued to bear fruit. So BPI, besides our thesis of economic reopening, that benefits banks, more economic activity, more loans, cost efficiency wise, BPI is doing well. BDO been battered, but definitely the biggest beneficiary of economic reopening in the sector, given yung network niya of its branches, yung branch network. So target price for BDO is 148. For Security Bank, 118. Yeah, it's the same thesis na it's a beneficiary of economic reopening. So Security Bank is definitely something to consider, especially right now. A lot of clients or investors have been discounting Security Bank since it's not part of the PSCI anymore, but the fundamentals remain the same. So yeah. So in terms of other picks, but this is part of Trader's Playbook already. So this is not part of our long-term picks per se, but we would like to reiterate which names can give you outperformance in the coming months, especially diba, in line with our theme of economic reopening, also in line with our theme of focusing on names which can pass on cost to its customers, one of which is DNL. In terms of consensus target price, that's a target price of, take into account all the brokerages that cover the stock, it's 9 pesos. For DNL, the beauty of the company is it has the ability to pass on cost to its customers within 46 weeks. Its customers are companies also. So, ano siya, B2B, diba? Business to business. It can easily pass on cost kasi mga customers na sina Boysen, Jollibee, etc. So, there. And also, meron siyang Batangas plant poised to be completed in January. So that could support its growing export business. Also, it could make the company more cost efficient. It's because now it will have the capability to manufacture downstream packaging. Next is Bloomberry. For Bloomberry, same consensus target price is 9 pesos. Casinos, diba, beneficiary siya. Pwede na pumasok yung mga foreigners sa Philippines. So yung mga Chinese, Korean, the usual bettors here, that could benefit the VIP segment of Bloom. And of course, since us personally, individuals can now go out as much as we like, that will benefit Bloomberry's mass table and electronic gaming machine segments. So there. And then the Boitis Power. For Boitis Power kasi, it's more on the power issue right now. Because you have to keep in mind, Boitis Power is a power generation and power distribution company. So since it generates energy, so of course yung tight power supply, tumataas yung price eh. And since that provides power generation companies higher margins, since they usually, the power generation side, they pass on costs to the distribution companies like Meralco, diba? So that's one way Boitis Power can benefit from this certain situation. Nevertheless, besides that, it has a new capacity, yung 650 megawatts GM Power din in Unit 2. is in final stage of construction. Unit 1 is already operational. So this new capacity will benefit Aboitiz Power definitely. So these are our top picks of, again, this exclude fundamental previous playbook picks, but yeah, you can really see the upside there for some names, especially on this recent large pullback, something to take advantage of for long-term investor. But as mentioned, guys, this priority here is to be liquid, to have cash, to eventually capture a better average cost for your long-term holdings. Okay, so there. This is our model report, huge outperformance as compared to PSEI. So our picks are showing resilience to this huge market downturn. So in terms of previous playbook highlights, so far, dami, may cut loss na hit last September, but meron din mga profit na hit like Wilcon, Jollibee, the resilient names. Diba? So I think I like to focus here the average performance of our playbook as compared to PSEI. So huge outperformance. So we're proud of the report. And we also issue sell calls. So sell calls na marami rin na hit yung home, saka dito, significant pullback. So it favored those who are holding the stock and at least nabawasan yung losses. All right, so let's start answering your questions. Okay. So the question is, what index level do you see for the end of 2022? In terms of fundamentals, we haven't changed. Yung bear case namin for 2022 is 6,600, but we are open to the fact that we will not hit 6,600 by year end. Nevertheless, we're already crafting our full year 2023 outlook para at least mas ma-capture all the forecasts, economic forecast, inflation forecast, interest rate forecast, and we try to issue that as early as we can. But the bottom line here is, as of now, the market in terms of risk, there are still a lot of risk in the market, and this is not the time to be fully aggressive. It's a good time to be liquid, to have as much cash, but with the mindset of entering the market. Yeah, we should have enough cash with the mindset of entering the market once we see it bottom. But it's hard to say when do you catch the bottom, right? That's why it's better to really have the cash already set aside. Kasi, for example, during the COVID, diba, nag 4,000 yung market, pero ang bilis, like in the same week or the week after, nag 5,000 siya agad. So it's better always to be prepared. Next question is, why are CREIT and MREIT not covered in the consensus corner report? Does it mean that we don't recommend them? Well, for MREIT, keep in mind, guys, yung consensus corner report, it's a report. It's not the target price that you see there are not our target price. It's a combination of all the target price of all brokerages that cover the said stock. For MREIT, we cover the stock and target price 21. It's not in consensus corner report because it requires more than one coverages, and we have yet to see more brokers cover MREIT. For CREIT, we don't cover them. We don't cover CREIT yet. But we are currently creating a report now for CREIT. So no official recommendation for CREIT. So I hope I answered your question. So good question. You notice that there's no buy on telcos, Globe, Teleconverge. So probably you're asking what are the thoughts on those names. For telcos, what you saw in our presentation are top picks. Doesn't mean no buy calls. But to clarify, we have a buy call on PLDT with a target price of 2,150. We prefer PLDT over Globe and Converge mainly because of course, given name Paymaya, the growth of the Paymaya, but the upside of the home broadband business. And keep in mind, guys, yung Converge, why it's dropping significantly because the residential subscription additions is the growth of that is slowing down because the market share is being captured by PLDT and Globe. For Globe naman, it's more on, well, our target price for Globe is 2,800, but we initially had a hold recommendation. Nevertheless, PLDT is one of is our top pick in the telco sector. So that's a buy for us. It's not necessarily our top pick because what we're pushing for is economically open names. That's what we prefer more. But PLDT is something you can consider for not only dividends, but the growth of the home broadband and the Paymaya business. So there. So next question is, if the Fed continues to raise rates until 2023, how do you proceed? It's a good question. It's a very good question because it's easy. You don't fight the Fed. If the Fed continues to raise rates till 2020, definitely shouldn't be aggressive in the market. The market will definitely be sluggish, slow until 2023, assuming the Fed continues to raise rates by then. And the expectation kasi is the Fed will slow down their pace of increase rates early 2023, tapos the more rates will just keep steady lang siya for the year. And then 2024, baka mag-cut na ng rates ulit. That's the status now. But as you may have noticed, fluid yung situation right now because they're data dependent. So they will see how inflation numbers employment numbers, dun sila magdedepend. So again, the question is, how do you proceed right now? Don't be too aggressive yet. And it's too early to be 100% in the market. It's not the time yet. Outlook on REITs. Yeah, yung REITs kasi definitely good long-term investment. So the next question is, why are REITs not doing so well right now in terms of share prices? Because of the fear of high interest rates. The thing is, a lot of investors are shifting to fixed income or other assets kasi mas stable yung rates or higher than inflation yung rates. But for REITs kasi we have to consider it's not only offering dividend yield, it's also offering you share price appreciation. Hindi lang siya yung parang preferred share. REITs, especially mga companies na nagsasabi they will infuse a lot more assets sa REITs, that's where the upside will come from. Because once the parent company infuses more assets into REITs, yung value niya, aakit talaga. Right? And of course, there's also risk right now regarding yung work from home, di ba? For the BPOs, next 10, di ba? Yung recovery of office will be delayed. Nevertheless, that's why we recommend the bigger ones because they have more stable tenants. Diba? Yung mga tenants na long-term tenants with long-term contracts. That's why we tell our clients, and I'm telling you right now, we prefer MREIT, RCRA REIT. The bigger, the better muna right now. So the next question is, what's the impact of the recent announcement of 100% work from home and its impact on real estate company share price? So definitely, it's a good question. Definitely, that will now delay the recovery of the office names. That's why what we like to share is to shy away first from or to lessen exposure from companies with high office exposure and shift to companies with higher mall exposure. Right? Because the residential right now is definitely slowing down. No doubt about it. We're seeing a lot of cancellations. But it may get better in 2023, but right now, it's hard to see the light given high interest rates. But that's why we push for companies with high mall exposure. So, there. Okay. So this is a good question. So, do you still advise to buy SGP and nickel for long term or get DMC or Semirara? Yeah, it's a good question. Well, if you ask me, let's start first with commodities as a whole. Commodities as a whole underperform during times where dollar is strong. I think the risk rin kasi is for commodities right now, excluding gold, yung mga commodities like nickel, copper, is if there's fear of lower demand because of recession, they underperform. So while nickel is like nearly 50% down from its peak, it could go down further from here. But we should not doubt the long-term prospects of nickel kasi diba, electric vehicle is the future. It's already ongoing na nga yan eh. And nickel, ginagamit yan talaga it's being utilized for electric vehicle. So it's definitely long-term play. But the question is, it will not go up immediately because that's a lot of those have been pricing right now. So what's going to be pricing by the market is yung nickel prices mismo. And nickel prices will not outperform if there's fear of demand destruction because of recession. So that's for nickel and other commodities already. As for the DMC SEC, for Semirara, it has performed well. And it's poised to give out huge dividends. Okay. But in terms of upside, syempre limited na siya as compared to other index names. But if you ask me, Semirara is good to hold. As well as DMC. If you want to be a bit more conservative, DMC is okay to hold because DMC, more than 50% of its earnings, Semirara rin naman. But DMC also has Mila, DMC Homes, DMC Constructions. DMC also has nickel. If you want a direct or higher beta or more exposure to the coal business, you buy Semirara instead. Diba? Index name na rin naman siya. But you have to be careful because of profit taking, especially Semirara has already rallied. But we recognize for Semirara, diba, we mentioned nga something to watch out for in October is yung oil prices, coal prices go up, especially during winter season. So that can result in Semirara share prices going up. Especially we also recognize, if we take a look at the edge disclosures, diba, we have to recognize that a lot of management have been buying Semirara. So it's a good signal despite Semirara trading near highs, management is still buying the stock. So that's good. As for SGP, well, it went down prior to the market downturn. It went down because of the mentioned company specific issue. But for SGP, it remains to be the fact that it's a transmission company. It's the sole transmission company. So dividends, and yan, it has been consistent in giving dividends. So it's good to hold for long term. We have to be patient about it though because it has company specific issues, diba, mga news and stuff. So we have to take that consideration as well. So I hope I answered your question. So yeah, I mean, there's a question. Can PSA go up a size 7,000 and that's improbable, right? Of course, diba, usually kami dapat yung positive, but we have to recognize the risk because there are risks in the market, diba? We can't be blind about that. As mentioned before, yung fundamental bear case namin 6,600, but I'm telling you right now, that's improbable to get hit given the lots of risk right now. So we're telling you right now is to be not be aggressive in the market right now, to be picky. Diba? You can consider our picks. But doesn't mean you have to buy all of them right now, but you can put them on your watch list because the market may further go down from here. That's definitely a possibility. But to answer your question, can go as high as 7,003, and that's improbable. Okay, so I think there's also questions here in terms of, diba, you notice in terms of our research reports, the latest one that we uploaded was September 21. And I guess this is in line also with the maintenance. You will notice the main charts have not yet fully come back. You can also access our mobile platform, and we're already working on that one. Definitely within the week or as early as next week, all of this will be resolved already. So we apologize for that. We're definitely fixing it as soon as we can. But as for the research reports, we suggest that you join our Viber market updates. We have a Viber group for all clients. If you're a client, definitely you can join our Viber group. So dun namin pinopost yung reports for the time being. So the PDF and everything. So I hope you guys can see our reports in the website. Definitely lahat ng na-miss yung we will upload there once we get everything sorted out. So there. So probably open for one last question. Okay, the last question is, do we know if SecB will release dividends this year? Yeah, it's a good question. Because if we depend sa earnings nila so far this year, it has done well naman. So if it released dividends last year, there's a good chance it released dividends this year. But of course, that's not yet assured. So yeah, that's it. Thank you guys. Thank you everyone. I hope I see you again next month and in the coming months for our next event. I hope you also attend all our other events. We post all of our events. We post my calendar of all our events. So please join. We have great speakers, quality webinars. So for all of you. So thank you. And as always, First Metro Securities, it's hashtag your future first. This has been Royce Aguilar, Deputy Head for Retail Research. Thank you.